Welcome back. Shares of Tesla are trending higher today. The automaker has been promoting one of its key technologies. Our guest has been following the stock closely. Let's bring in Tom Narayan, lead global autos equity analyst at RBC Capital Markets. Thank you very much for joining us, Tom. Any thoughts on why Tesla's up today? I'm seeing some headlines. None of them are terribly specific. They're referring to Elon Musk touting the technology capabilities of Tesla.
I mean, it'd be hard to say why specifically Tesla's up or down on a given day without any specific real news. I do know that, for the most part, the stock has obviously lost a lot of value, right, in the past few months, something like $250 billion of value. So just judging from inbounds that we've gotten from investors, I think there is a desire to understand if perhaps there is some upside here with the stock. What are the catalysts here? So it could just be some investors looking to perhaps call the bottom, but that's always really difficult to do with a company like this.
And you do think there's upside, if I understand correctly. We're looking at the share price now. It's at $179 and change. You have a price target more than $100 more than that. Your price target is $297 US. Take us behind your thinking there.
Yeah, certainly. I do think there's a lot of upside. Remember, we in the sell side, our job is to call out what we think the stock will be in the long term, not really day to day or month to month. So it certainly is going to be a challenged one. There's not a lot of near term catalysts, but we do think there's a lot of untapped value here. One thing we would highlight, there's an energy storage business that nobody's talking about. It's very boring, maybe to some. We actually visited the facility a couple of weeks ago in California. Huge value there. Right now, the market is around 100 gigawatt hours of battery storage. It's going to be 20 times that when it's all said and done, and Tesla has 15% of this market. We think it'd be worth $100 to $200 billion of value. It's just one example of, I think, places where there's unlocked value, misunderstood value there at Tesla. We think longer term, this will bear fruit. It's just near term, it could be a little challenged because of everything going on with electric vehicles.
The stock, what kind of multiples and valuation measures do you use to arrive at a target like that? I have the company, for instance, trading at close to 60 times expected earnings. And for a long time now, portfolio managers have been noting that is sky high compared to the likes of Ford Motor, for instance, which is trading at 7 times multiple. Is that the right way to think of this stock or not?
I don't think so. Certainly, you're looking at the year 2024, presumably, right?
Yeah.
So I think the way to look at this company is its different piece parts, and you recognize that a lot of the businesses that they are in will really reach their maturity not anytime soon, probably the year 2035, in some cases the year 2040. When you look at it that basis, you see things like energy storage, like I said, is growing by 20-fold. That will be a significant source of value. Autonomy is another place where there's significant value. That's actually 80% of my valuation. Only 10% of my valuation is the actual car business. If you look at a Ford, that's basically what that business is, the kind of box with wheels, so to speak. I think the real value for Tesla has to do with its potential, not really what it's realized thus far.
Okay, let's talk about a couple of other companies you cover. Ferrari is one of them, the iconic European automaker. You're also bullish on that with an outperform rating and a share price in euros of 463, which is well ahead of where it is now. And you recently upped to that target price as well. Why do you like Ferrari?
Yeah, thanks for asking about this one. It's really a special company. It's not really an autos company. It's more of a luxury company. But recently, they've been speaking a lot about their electrification strategy. I think a lot of folks don't realize, they're big in Formula One, and they actually use that as an R&D center. They make their own e-motors and their own inverters. It has a better power density. We expect than even a Tesla or a Lucid, for example. So we think when they come out with electric vehicles, it'll be really powerful. And at the end of the day, it's remember, this is a luxury stock. We think it should trade more like a Patek Philippe or an Hermes. When you put those types of multiples on them, you realize there's a lot of growth there. And we think electric vehicles will actually be a way they can extend the profitability spread they have versus other car companies.
Interesting to hear you draw the comparison with other luxury brands that are not even close to the automotive sector. I was just about to ask you about the value of the Ferrari brand. Why don't you just talk a bit more about that?
Yeah, it's excellent point. With Ferrari, if you compare it, let's say with other kind of luxury automakers, say Lamborghini, let's say, or Bentley or Rolls-Royce, those are owned by larger conglomerates, and where you have to make that car on a platform base. Here, Ferrari is its own entity. They can hire who they want. It's an innovation center. There's a lot of customer loyalty, exclusivity. There's heritage. There was just a movie out recently on Ferrari. When you're buy a Ferrari, you're not just buying a car, you're joining a club. So yeah, all these factors, exclusivity, customer loyalty, heritage, that all creates a halo effect. I think Ferrari really stands alone. The only companies I think really are in that kind of grand kind of scale of luxury are Patek Philippe in watches or Hermes in soft luxury. It's really in a class all by themselves when you compare them to the auto side.